We've been recommending Bitcoin for 8 or 9 years, and it remains, in our view, a core asset. If we look at the price performance of Bitcoin, and we do have to look at price because it's a measure of its trust, it's following very closely previous halving cycles, and that implies Bitcoin should be around 100 to 150,000 in the near term, but could easily get close to 500,000 in 5 years. At 500,000 per Bitcoin, it would still be less than the value of gold today. And I think Bitcoin will surpass the value of gold, which would put the value much closer to $1 million per Bitcoin.
Tom Lee, co-founder and head of research at Fundstrat Global Advisors, has consistently highlighted Bitcoin's potential to outperform traditional assets like gold. In 2020, he noted that Bitcoin had surpassed both U.S. Treasuries and gold in year-to-date returns, attributing this performance to strong fundamental factors. More recently, Lee has made bold predictions about Bitcoin's future value, suggesting it could reach $250,000 by 2025. He cites several catalysts for this anticipated growth. The first catalyst is the approval of spot Bitcoin exchange-traded funds, ETFs, which has made Bitcoin more accessible to a broader range of investors, potentially increasing demand. In addition, the recent halving event in April 2024 reduced the supply of new Bitcoin, which, combined with rising demand, is expected to drive prices much higher. Lastly, Lee believes the Donald Trump administration will be great for Bitcoin and crypto asset prices, encouraging suitable regulations and favorable monetary policies that will contribute to significantly higher Bitcoin and crypto prices in 2025 and beyond. President-elect Donald Trump has proposed creating a national Bitcoin reserve by retaining seized Bitcoins, totaling approximately 210,000 BTC, instead of auctioning them. This move is intended to support the U.S. economy and reduce national debt. Plans are also underway to establish a Bitcoin and crypto advisory council comprising industry experts. This council will provide guidance on regulatory matters to foster a crypto-friendly environment in the U.S. The administration has nominated individuals supportive of cryptocurrencies to key regulatory positions. Notably, Paul Atkins, known for his favorable stance toward crypto, is expected to lead the Securities and Exchange Commission. Additionally, venture capitalist David Sachs has been appointed as the White House AI and crypto czar, tasked with developing a legal framework for the cryptocurrency industry. The administration is anticipated to back legislation that provides regulatory clarity for digital assets. This includes potential adjustments to tax rules related to staking rewards and the integration of digital assets into existing tax and banking laws. We will bring you clips from Lee's recent interview with Global Money Talk, in which he discusses his expectations for the Donald Trump administration and the potential impacts on the cryptocurrency market. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. We appreciate the support and hope you enjoy the video.
Trump is one of the most market-friendly presidents ever, meaning he's going to focus very much on and rate his presidency based on how the stock market does. And so that's good for investors because if he introduces policies that worry markets, like deficits too big or tariffs too aggressive, he'll see it in the stock prices. I think the safest way to navigate this from our perspective is to focus on things that we all agree he'll pursue. Deregulation, pro-business and market-friendly, which means financials and small caps, but he does want to make the government more efficient and even do tariffs. So I think multinationals are a little more challenging, and industrials like defense would be challenging, and of course negative for healthcare and energy. From a bond market perspective, I think interest rates are initially rising because of concerns about deficit spending. But again, that's negative for stocks. So I don't think that Trump nor his advisors want interest rates to go up dramatically. So I don't think interest rates are going to be the reason stocks underperform. And then from a crypto perspective, it's clear to me that he's pursuing a very pro-digital assets platform. I mean, he ran on the idea of Bitcoin potentially becoming a reserve asset. almost all of his key advisors are large owners of Bitcoin. So I think Bitcoin is going to be very central to the White House initiatives over the next 4 years, which of course is positive for Bitcoin. To us, Bitcoin represents one of the most trusted assets in the world because we're living in a digital age where AI and cybersecurity threats have really undermined trust in both dealing with each other, but also in financial institutions. And that means the price of Bitcoin represents the value of trust in a trustless world. We've been recommending Bitcoin for 8 or 9 years, and it remains, in our view, a core asset. If we look at the price performance of Bitcoin, and we do have to look at price because it's a measure of its trust, it's following very closely previous halving cycles, and that implies Bitcoin should be around 100 to 150,000 in the near term, but could easily get close to 500,000 in 5 years. At 500,000 per Bitcoin, it would still be less than the value of gold today. And I think Bitcoin will surpass the value of gold, which would put the value much closer to $1 million per Bitcoin. I think Bitcoin is something you don't want to own if you believe there's another way to measure trust. I think that's many years away because even the United States may potentially own Bitcoin as a reserve asset. That is a huge endorsement of the security of the Bitcoin blockchain.
In terms of the other coins, are you as bullish? Anything that other than Bitcoin that you're as bullish? Ether or Solana, some of the other bigger coins?
We've followed crypto for 7-8 years now, and we've seen many what they call altcoins come and go. I think the most important thing to think about if you're going to buy altcoins is, number one, if you're investing in an altcoin, you should measure how useful that token is or the size of the community. By that measure, Ethereum and Solana look like very credible blockchains, layer 1 blockchains. But the second thing to keep in mind is that when crypto is in what they call crypto season, when it's in a bullish cycle, the altcoins do very well. So if Bitcoin can go from 90,000 to 500,000, many altcoins will do better, but those are not investments, those are trades.
Lee is the co-founder and head of research at Fundstrat Global Advisors, an independent equity research firm with a proactive stance on cryptocurrencies and digital assets. The firm provides a dedicated digital asset strategy that delivers an in-depth cryptocurrency market analysis. Additionally, Fundstrat offers digital asset consulting services, assisting companies globally in understanding the complexities of cryptocurrency economies and technologies. Despite being a predominantly TradFi company, Fundstrat has been recommending Bitcoin and other top cryptocurrencies to all categories of investors for years. Previously, they recommended that investors have about 1% of their portfolio in cryptocurrencies, particularly Bitcoin, Ethereum, and Solana. Today, that has changed to 2 to 5% due to the significant price growth Lee is predicting for cryptocurrencies in the coming years. Let's get back to the video.
I generally don't try to advise people on allocation because how much someone puts into bonds, and bonds are less risky, depends on their tolerance for risk and their age, and also how much money is in the stock market versus their total net worth. So those are 3 variables that I don't know, and that's why we don't usually advise an allocation mix. But I can say that we've recommended initially, when we first wrote about Bitcoin, that investors put 1% into Bitcoin. And if they didn't sell that Bitcoin, even with the stock market gains, it's now 40% of their portfolio. And if our second suggestion was 0.5% into Bitcoin and 0.5% into Ethereum, and that is now 80% if they didn't rebalance. Today, we're recommending at least 2 to 5% into Bitcoin, but that is as a commodity or alternative exposure, because if they invest 2 to 5% of their money and somehow crypto goes to zero, they didn't lose everything. But if Bitcoin reaches some of the targets we expect, then Bitcoin could end up becoming 50% of their portfolio again. There are many people who are bearish because they say baby boomers are going to take money out of the stock market as they retire. And as you pointed out, baby boomers have been doing this for 8 years, actually close to 28 years if you take the oldest boomer. And if we look at the last 28 years, the stock market has gone up. The reason it's gone up is that the baby boomers control over $120 billion of household net worth. The interest income from that is close to $7 billion a year. Sorry, $7 trillion a year. It's 120 trillion and 7 trillion. I may have used the wrong numbers. The US GDP is 25 trillion. There is so much money saved by the boomers. If the stock market goes up 20%, well, they just made 30 trillion, okay? They're not going to consume their savings. That's a very big misconception. In fact, as you know, household net worth in the last 28 years has exploded. So the boomers are spending a lot of money and living very well, and that's helping the economy, but there's still a lot of money left. And that's going to be transferred to millennials over the next 20 years. There's many people who can model this simply, but the median estimate is roughly 80 to 100 trillion will be transferred to millennials over the next 20 years. The average millennial will be somewhere between 35 and 45 when they receive this money, and that's going to be very stimulative not only for the economy, but will also be stimulative to equities because they're more likely to own stocks than a boomer.
About when do you think the bulk of this transfer is going to take place, or is it sort of in the process of happening right now?
I don't know if someone should try to model that precisely because we don't know what the mortality is going to be and we don't know the composition of portfolios. But if someone were to just make a simple observation, for the last 15 years, every single bear has told me the same thing that you just said. Baby boomers are retiring. It's a headwind for the economy. It's going to be a headwind for stocks because they're withdrawing money. And if they acted upon that, they missed out on 15 years of prodigious stock gains. So that would be my answer.
The cryptocurrency market experienced a bit of turbulence on Thursday, with Bitcoin dropping to an intraday low of $91,215, a 3% decline against the US dollar. Top altcoins also saw significant price drops. Ethereum's price dropped by almost 4%, while XRP lost about 5% of its value. Solana and Dogecoin were more impacted by the market decline, losing about 6.3% and 6.6%, respectively. Experts believe the turbulence might be linked to recent news that the U.S. Department of Justice is preparing to sell over 69,000 Bitcoin seized from the Silk Road marketplace, currently worth about $6.5 billion. The court approved the immediate sale of the Bitcoin recently, a decision that has stirred anxiety in the crypto market. However, some analysts have assured investors that the cryptocurrency market is big enough to absorb and recover from the sales within a week without major disruptions. In recent Twitter posts, Real Vision CEO Raoul Pal reminds investors of the bigger picture, especially global M2, and its impact during previous crypto cycles. Pal's first post reads, "Yes, we are still in the banana zone. Banana zone phase 1 was the breakout last year, and now the consolidation, like the 2016 and 2017 consolidation after phase 1. This won't last long. Next up is banana zone phase 2, the banana singularity or altcoin season, when everything goes up, followed by a bigger consolidation. Finally, banana zone phase 3, when the core winners explode to make much higher highs. That's my roadmap to Valhalla." In a follow-up post, Pal adds, "Why it's all going to be okay. Global M2 is repeating the 2016 and 2017 cycle." He accompanies the post with a chart of global M2 between August 2016 and January 2018. The chart shows a consolidation phase, similar to the global M2 chart today, before prices begin to scream higher in 2017 and into early 2018. Pal also adds the global M2 chart, showing a 12-week lead on Bitcoin. The chart suggests that the consolidation phase might last for a few more weeks. Pal's final post reads, "This was the outcome of the exact same in 2016 and 2017 versus now. Chill, It's all going to be just fine. Maybe it goes a bit lower, or maybe it is done already. Either way, it will go higher over time. Don't expect an exact repeat, but a rhyme. Valhalla awaits. Don't f this up. Do you agree with Pal's analysis about the bigger picture? Please drop your replies, as well as comments on Tom Lee's interview, in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for watching our videos.